Hello, everybody. Let's jump right into things. Share screen. So overall, yesterday was a pretty weird day. For the most part, it was sideways. I ended up trying to go long an Oracle. I kind of botched a trade, so I took it off for a small win. Um, and then I traded Tesla long. But Tesla long was a weird one because of QQQ right here. QQQ was like literally one of the only names that broke bear out of this EQ. And then you'd figure you get a little back test here, and it didn't happen. It kind of cut right through, and then it just rolled over. So super weird day. I mean, once again, for nobody to step up in this whole entire area, and then for it to pop above, not get up here again, and then to fail here miserably, this was the place to short right there. Um, that little pop and drop here. And because of that, I took Tesla off a little bit early. We'll go over that a little bit. Hell, we'll go over it now. It was a quick scalp, very quick scalp. Ended up seeing this sideways range after a big bull move. I was watching EMA 12, and on the 1 minute there was like a rising, there was an ascending triangle. Which, like I said in the past, whenever I try to draw these trend lines, I always get stopped out of positions. So I just erased them immediately, and I was like, okay, let me just focus on what I want to focus on, which is we double top here, and the bears want to break this level here, and you have EMA 12 here that broke bear. And at that point, I was watching. I was like, okay, bears broke this level bear, and then the bear. Let's see what the bears can do with it. Inside bar, inside bar, and at that point, I'm saying to myself, okay, if the bulls can break this to the bull side, that just shows me that the bears are on the weaker side because they got the bear break, and then what they do with it, they did nothing with it. They couldn't even push down to here. So, obviously, it could have faked me out. Um, but I just took it from this break here to like up here, and didn't hold on to it here. And like I said, the reason I didn't hold on to it was because simply because I mean I have to I have to I have to rely on my TA and assume that there's going to be some sort of rejection here. And I was sort of right, but not really. Tesla was stronger, so you know, again, the deeper this went into it, the more Tesla went. So like this essentially is what I missed on the Tesla trade. It's about that. Okay. So let's check out indices. I'm going to get rid of that. Get rid of that. And get rid of that. And we have an inside bar. And we have price going towards the low end of the range. But again, if we zoom in here, the most important things are this up here, because this was the breakout point. That's been battled through a little bit, but it's still important in my opinion. And then you have this whole daily structure here with the POC, the value area low here. And then down here is the monthly candle low. So down here would be the monthly consolidation. If we can get down and break these levels here. So quite a lot going on here. It's definitely hard to figure out what the market wants to do. Um, I mean, I guess you can keep it pretty simple here. Is that it sure looked like we had this pop here, and it didn't really do much. Yesterday, the Bulls had an opportunity. They failed. But so did the Bears too. So you have an inside bar doji, but based off of that and where we are right now, we're at the low end of that range. So you have to give the nod to the Bears to be positioned to break this inside bar bearish and to go ahead and tack these like next levels here. And how do they do? Who knows? Nobody really knows. Which one, birdie girl? Oh, you're so pretty. You're so pretty. Yes, you. Same thing here. Actually, different. Quite different, actually. There's no inside bar. We're seeing relative weakness in SPY. That must be either banks and um, but healthcare has been doing pretty good though. Maybe yesterday it was weak, but you had the lower low on SPY, and it's getting closer to that 661.21 level. That would again break the daily, put the downtrend to the bears. And let's look at the monthly chart on this one, and that monthly level is going to be right down here. That would, and as you see, that would be the first time we've had monthly consolidation since this candle right here, which was in March. So we had a high, high, high. Even though technically this was bears doing a little bit of work here because we closed here and then we ended up closing. So the bears actually sort of won that month, but still not consolidation, not consolidation, not consolidation. Up, there was a little bit of consolidation here, but it looked like it was to start the week. We opened here, they pushed down, and then they closed above, which is a bull win. There you go again. And then zoink, there's your monthly consolidation. Big push down, and then we've just gone up from there. So this could be the next spot for daily consolidation. And then we look for this level here because it was the last higher low level, point of interest down here, and maybe even EMA 12. But even if we got the bear break here, we would still need price to break down here. But you'd have to think that if it breaks this level here, this level is close enough where it's going to at least test it. So again, it's a very bearish scenario. Let's take a look at Google. So Google here had a bull break yesterday with no follow through, which is, I guess you can call that a rejection, right? With a candle like that. But I don't think this is much of really a name you want to be picking on here. As you still above EMA 12. And with the bull break here, you could assume that you know, a daily high or low is probably most likely it looks like it's going to be a pretty tight range, so it's hard to tell, but I mean, you could start to see that maybe this just kind of starts trading sideways for a little bit. One of the stronger names here, opening towards the low, but above the prior day close. We have Meta here, weak. I've been watching this for a potential long. We talked about this yesterday, and if you zoom into the hourly, again, this is oh darn it. We got one touch, two touches, three touches, one touch, two touch, three touches. So you know how much I hate um these trend lines, but there's a lot of other confluence. Monthly high or low, weekly measured move completed, daily oversold, hourly potential hourly wedge. So for me, I mean, a lot of things that I like, and it would just be to probably like the 200-day ish, but it is being suppressed by the 12 EMA. It's under all three of these levels, which I don't necessarily love. But if in a world where if you're looking for monthly higher lows, the dailies are probably almost always going to be under the moving averages. So you have to factor that in, or then you're just never taking monthly higher lows. I could ideally wait for price to close above the EMA, which would be more of like the right side of the V stuff. Tesla here had a good day yesterday, gave it all back. On I think there was some poor news that came out, and I'm glad I wasn't here at the computer because I think I would have probably gotten stopped out of a position because I was looking for a break and retest right here. Break and a retest to get up to this red line, and as you see, we kind of got way down to the bottom of the range where it's not ideal to go long off of the bottom of the range. You'd rather go off the top of the range. You can look for a bounce here, but then it just fails. And then bears end up using this as leverage. Amazon down again. It did bounce off his 50-day here, so it looked pretty good potentially, but you have to zoom out on this chart. I think zooming out on this chart is really the key on the weekly, because for me it was this sideways range. So you have this lower high with a follow through, resistance, and then right here. So it's like the bulls really wanted to prevent from getting back into the range here. And as you see, they're kind of stuck back in it. And now we're opening at the low. So there's a chance that we come back and test here. But this is just like the chart we just looked at on a much smaller time frame. I mean, if we come down here, do something like this, like there's a trade there for sure. As for today, still bearish. Nvidia down a percent. Inside bar video earnings coming out very soon, tomorrow to be exact. Um, and again, like we're kind of in the smush zone here. There's support below. We've bounced off support twice already. I just don't know if we're going to see any big moves with follow through here until earnings. I think they're going to let earnings figure this one out. PTLR week. That's unfortunate because I was looking short on this one yesterday, but it was really weird. I actually took a short on this one, but I stopped out break even. I took a short off of here, and then I didn't sell partial, and I'm getting stopped out. And it was super strong. And then it's kind of looks like a head and shoulders here. But once I got back over it, like this is the tricky part here. This is what throws me off a lot and gets me antsy is you get this little rejection here, and then you get the lower low with no follow through, and then you get the stop out of these levels, and then further upside. And for me, it's tough because I know my stop would have to be above this level here, but I'm just not sure of how much wiggle room I would give. And that's what really matters, right? I guess if it was on the 5 minute chart, let's see, I would do 5 minute, what is it, about 40 cents? I'd want to do 40 cents from this level here. So call it 171.90, so 183.30. Sorry, 170 183, what the hell am I talking about? 172.30. God, that's very, very wide, dude. I mean, it's such a wide stop loss. But let's say you get in here 170.31. Okay, that's not, I mean, that's really not that bad. And then you would want to get to here at least. And if you're a real bruh, down here, 10 to 1. Yeah, I mean, these are tricky because there's no real like higher time frame setup there. I don't think. At least it's counter trend. I would think. Yeah, unless it's just like a rinky dinky hourly lower high, but yeah, it's tough to say. That's just a move to move trade. You don't want to be hanging on to those too long, and that's a problem that I'm having is that like I try to get too much out of those. It used to be that my stop was too tight on those, so that play in PLTR would stop me out, and then it would go down. And the other problem is that um, even if it works right away, I usually don't take profit, and then I get stopped out. Like over here, and this is a quick little move here, break, back test, down low there, boom, easy trade. So PLTR weak, but PLTR is in the same camp. It's gonna react with Nvidia, right, Bernie? It's gonna react with Nvidia. A little basset hound. Microsoft. Microsoft is gapping down big. Yikes. Inside bar, broke bull, inside bar, or no, didn't break. It broke bull, doji, and now we're just gapping down. So there's some super relative weakness here in Microsoft. And it's got this death cross here, minor death cross here. I mean, it really is all about it's all about this level right here. Birdie, relax, sweetie. So this is the furthest candle down. Bears can push before a big move up. And these are all little resistance supports too. I mean, you can make a case that this is one as well, which is fine. But this is the OG. This is the most important one. And you can see that it actually played a role here, which I could have been on right up to the 50 day. I mean, it's a nice trade. Um, but now we're back here again. Now we're back here again. I'm looking right down at the 200 day with the dividend coming out soon. I mean, it seems like a fairly easy setup. It looks like the bears like stood their ground up here. There were so one wick, huge gap down, big move up, and then another wick. So we're back here again after using all this energy to get back up here. Now we're back here again. Ooh, these charts are not easy today. And that's the easy part. The charts are usually the easy part. The hard part is the execution, at least for some. Apple here weak. We have this little guy here. I'm going to erase this guy because I think this guy isn't as important as, like, yes, it's a, it's the bull break here, but I believe that the bulls took the EMA 12 here route. I don't think this is important as much as this level is. This level is the most important level. All right, so tech is weak. Tech is weak, 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 weak. I know crypto's weak too. Let's take a look at some quantum after earnings is over with. Big gap up for QUBT, but now having a little bit of issues here. So if we're using our ranges here, we understand that they were using this POC as support. We broke through, and once we broke through, we kind of came down. Then we gapped up on earnings, but we're still having trouble with this EMA, this POC. From an hourly standpoint, you see it got a little bit above it here. As you can see, this level was acting as a roll, got above it here, gave it back, now trading sideways here. They definitely want to hold this level here. Definitely want to hold this level here. And then if not, we're looking down here at this little support level. But based off of where it is, I know a lot of funky stuff usually happens when we're inside of these ranges, so I'm not really too interested in that. And again, we're just looking for daily bounces, some sort of daily bounce. This had earnings help, but these, you're looking for a daily bounce here in the middle of no man's land, and everybody is hoping and praying that this thing goes all the way down to the 200 day, which is definitely plausible because there's no support here. Um, those things kind of scare me though. I don't know why. It should be the opposite. I should be seeing this and licking my chops. But I'm always so hesitant when things look so easy. But you can see here that we bounced off of the 200 day, came back, or sorry, the alternative POC, inside bar. I mean, this should have been the day where I gone short, bull break above, pass back above, underneath. I don't know why I didn't go short that day. I guess because I didn't want to short at support. Like if that setup was like on a back test here, and then it looked like that, then I think that I would be more interested in playing it. So we might get a back test here, and then before that, like that could absolutely happen. But do you want to bank on that? Do you want to be trying to catch a bottom here? That's a hard thing to do. Because you're saying if you're looking for a daily bounce, you're looking for an hourly bounce, hourly higher low, higher high type deal. Maybe getting on the pullback. If you're looking for a really aggressive play, you're finding support, you're looking at the 5-minute chart, and then maybe you're seeing something on the 5-minute chart like an EQ or a descending wedge, which would then make your hourly bounce. You get the hourly higher low, higher high, and then you get which is again very hard to do. So inside bar gap downs, weakness in these sectors, and they all kind of have like the same thing going for them, which is like we know where they want to go. These are hard to get into though. Like they should. I think. I don't know if they're easy. Like I guess some people might think they're easy. Like I'm sure there's some traders that make an absolute killing off of just making these type of trades. Like okay, we're in an area with no support. We have a daily downtrend. We're still not daily oversold. We know where we want to get to, and the setup could be as easy as inside bar setup, back test, and then go down. Maybe we should take a shot at it today. And of course, my brain is thinking to myself, "Ooh, well, it's an inside bar gap down. Maybe it's going to be a fake out and then go to the back to support." The problem with going back into this range is that we don't know where price is going to like stop here. Like we know that with a daily bounce, hourly oversold conditions overbought conditions is the best time to start looking short. Start looking short, not going short. Unless it's a back burner, then I guess you have one or two confluence levels and you just jump in. We're not touching semis. Let's take a look at Bitcoin. Bitcoin has been very weak. But again, with Bitcoin, down a little bit, there's a wick here. I was thinking about maybe a part of me was thinking like go for like a Bitcoin long today just because it's been so weak. But I mean, my lord, we broke through the support, broke through the valley area low. Now we're in no man's land. And again, like these levels here, like I just don't trust them. I mean, there was definitely like some sort of resistance here that broke through. It's just a price point though. I mean, this to me is more recent. It's sideways range with a nice bull break. So for me, this is the one that's more important, where there's a lot of bulls still standing here. Potentially, I mean, you have to assume that it takes profit at some damn point, Jesus. But when this level breaks here, which it does get cracked, because the very low of this is right here. So this is the last man standing, and he got cracked. But again, how well do they hold over that price? That's the hardest part. And that is so like yikes. Like how do you even get good at that? So Bitcoin, we this is just a daily stair step. So I'd have to go to the 4 hour to look for some sort of clues here. So you have this little lower low. Here's your follow through. There's your quick little back test. I mean, they have a lot of work to do. I mean, you could probably don't want to be interested in this. I guess there's a deviation play here potentially where we close back above, you hit here, and then you get to here, and then here. So if this happens, I might be interested. It would have to be a close. I'd like to see a daily candle close, or sorry, a 4-hour candle close. It looks something like this, but green, and then look for potential back tests. That might not even come. Let's see if there's any names that are green on the open here. No, 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 no. Mara is so weak. Holy shit. D-Dog. Good earnings, giving it all back. This market's weak, man. BMNR is one that has a lot of people intrigued because it's that like Ethereum one. It's probably not a bad spot to potentially look long here, but a few things I don't like. The first one is that we have increasing bull volume here heading into the 200-day. That's not a good sign at all. I mean, you might get a relief bounce, but and as for like support here, I don't really like usually you don't see price getting all the way back to these levels here, but it did trade in this range for a very long time, so it's worth noting. I mean, you could just take the whole damn thing until this big bull move. Wow. And this is where most of the volume was down here. There's no way. Wonder if we just but a lot of the volume was right here, eh? Wow. So it looks like a lot of the volume was right here towards the low. So this was all just like hogwash, and then the big money came right in here, and then boom. This is so gross. Look at this move. Look at this move on the weekly. Oh god. So you have this big move, you move up. You're thinking, okay, great, nice. But going to at least 200-day doesn't, or 200 week doesn't happen. Then it stops everybody out, and then it goes up. God, it really is like take your half or know that you're probably going to be scared out of your spot. You're going to be tested mentally. Like you have to be prepared to be tested mentally. Like you could have a winning position turn around on you, and it could stop you out, but it could also almost stop you out or stop people out who don't have a wide enough stop. So don't be like, okay, I'm going to take $20 out of the if it's like you had like a $200 trade and now it's like, oh no, it's $25. Let me just take my $25. Whatever, it's better than losing. It's like you should have probably sold half if you're gonna do that up, as it was going up. Um, but you don't want to do that. Just accept the stop. And if you find yourself overthinking those spots, then you probably almost always want to take some partial on the way up. That way, if you get stopped out, it's not the end of the world. That's advice I should take myself, honestly. A lot of weakness here. Let's see how the energy sectors are doing. Oh God, CCJ down again. This should down after getting up here. I mean, this I don't know why I didn't short this. I mean, it was just looking strong after this move up. And again, right here, if you go short on this day here, right? Like you get worked out again. So this is like the aggressive conservative approach, right? This is like either position or sniper. Sniper is you want to see a rejection off of this level, you go short, it stops above here. with wiggle room. Position is I'm looking short here. I'm scaling in one scale, maybe two scales, and then maybe a third scale. You stop here. CEG, not as bad. Oh, CCJ. I just don't want to see you break 80, dude. Hmm. Lots of weakness in the market. Let's look at gold and silver. So gold is interesting. A little bit of a 1 minute, 1 hour potential inverse head and shoulders forming here. Looking for a daily higher low after this sort of, inverse head and shoulders nonsense. It did lose the EMA 12, but I think that the most important ones are going to be. I mean, that's a lie. I mean, look at this thing. It held this. It was on all over this range for a while. Finally lost it here. Couldn't get back above it, and then there's your bull break. I mean, this is also a golden pocket play as well. I mean, there's definitely an interesting. It's hard when the daily doesn't close really. Like the times are different. Gold is 24 hour. Well, not 24 hour, but it's not. It's different. It doesn't have as much pre-market, all that nonsense. I mean, this could definitely be a daily. So let's see how far we pull back here. So do you use this or this? I guess you probably use the low here. So you have the golden pocket play, so you're probably looking for just a lower high on the daily. You have what looks like an In my opinion, and I mean, I like this candle here. This candle is usually a doozy because it's like this is like everybody's going short here, boom, and then you kind of run away from them here. Here's your higher low. It doesn't quite get down to that level there, and now we're popping up here. And now you see this fat range here though. So again, getting over this level is big. Here's your higher low, higher high. Now you have to get over this range. How much do you love going long knowing that this is in front of you? It's like literally going for a road trip knowing that it's going to snow. That's tough. It's tough. Ugh. There's also a world where we get this daily downtrend, and because the monthly candle lower high and then a lower low, so it ends up looking something like this on SPY, where it's like you get this boom, the follow through, boom, there's your lower high, and then the month closes, we get this weekly bull flag and a sorry, head and shoulders, and then we go down. I just don't know where to look today. I mean, everything is bearish. Look at some individual names. I'm glad I sold Lyft. Did I sell it? We had a huge move up. It took a lot of work to get through these levels with volume. And then I saw this doji candle, and I said to myself, on this day, that's enough. Bear break, we're out. And there's your bear break. Well, I was looking for first hourly oversold conditions, um, and it did pop up. It did happen, but it didn't pop up for me for whatever reason. And I'm glad it didn't because the market stayed weak. It would have given me this, which is enough to get risk free, but not really what I would be looking for. I'd be looking for an hourly high or low to get me back to the highs at least. That would also be a mixture of a break and retest of this structure. And as you see, that's just not happening anymore. We talked about quantum, we talked about Nvidia, we talked about QBT as quantum, Amazon, AMD. How's AMD looking? Okay, well, this looks like it could be a short, but I don't know how much I love this range because this range is less of a box. It's the furthest the bears can push it, but then you see it kept on going higher. So it's not like we had another pullback here in a range. So actually, I don't really like this range. It's not really a range. You can make a case that this was something, but again, drawing these things would have been bull break, and then it would have been back to support, big move up, big move down. Then you get the back test here with no follow through. Then it stops everybody out up here. You see what I'm saying? It's like rinse and repeat here. It's funny because Hogarth did say like put your buy order where your stop would be. So in this scenario, if you're waiting for a reaction off this level, your stop is going here. If you're just deciding to position into it, your stop is probably going over here or here. So if you put your stop above here and then put it above here, you get yourself a nice little blight. It's kind of crazy. The thing that tricks me, it's probably what they added. It's probably what they added is the fact that when you get this, and this is what I have to get over mentally, and I think this is actually kind of a breakthrough moment here, where you get this and you're like, yes, it's working. Thank you. Awesome. And you're expecting it to potentially come down, at least come down back here. And then it reverts and then it comes back up and it gets this level, which is a big level because this is where the bulls kind of rejected off of this structure here. So this sideways structure, back down to support, rejection here, and lower. So you get this little lower high off of structure because you're using structure because you're an idiot. And then realistically, and this is why I hate trend lines because realistically, if I don't have those trend lines there, I'm seeing the rejection, I'm seeing the pullback, I'm seeing support, I'm seeing a bounce. Like this is okay, but it doesn't even reach the 12, and it's probably a golden pocket potentially. But again, my stop needs to go up here. Like being here is aggressive and sniperish, and those are the things that high risk, high reward. And maybe there should be a rule with me with sniper plays that if you take them, you got to sell half. Because I know that's what Dan does a lot. Mara week we knew. QQQ open to bottom of its range under the 50-day. That's it. No, not even bothering with these IWM stocks when the stocks markets this week. What is happening? There we go. SLDP It's a big low SLDP. This thing can puke here. Had big earnings. There was your top. Now you're back down at this level here, inside bar. Really holding this level here. This goes back to the bear break with no follow through. So it's like you get the bear break, but you don't like the candle that happens. So, and you want to watch daily because it's a daily level. And then you get your back test here. This was the play right here because this is the break. Here's your deviation. Here's your back test, and then that should have been an easy play there. But you have eyes on too many things, man. Hymns, Soundhound, breaking the 200 day, filling the gap. Maybe this is a long today. Maybe I don't know. Finally filling the gap. It's freaking super beat up. I'm sure the spread on this thing sucks. So again, if we're looking for a daily bounce, we'd be looking for an hourly lower high, hour lower high, then maybe like a high low. Put your stop under the level. Or if you're just a disgusting individual, you might be looking for like a play in the morning, maybe a 15-minute orb or something like that. But this can actually go nuts too. So I mean, I find myself always trying to take these crazy trades. Like, but when you're going against the daily and all that, like those trades are just a very low probability. But if you have a system, you have a system, right? You could say to yourself, you want to see a 15-minute orb, at least closed over the EMA 12 on the 15-minute. I mean, I guess SoundCloud is okay, but it's just aggressive. I mean, I could just look bear. I could just look bear. Bearish morning push to the downside. SAP still horrible stock here. Disney looking at poor UNH going down, down, down. Jason Derulo style. Oracle again was looking at. So with Oracle, this is what I was looking at. Oracle, I was looking for. I got the hourly bounce, and I was looking for an hourly high or low. Um, because we had this big bounce here, and I was looking for. We're at the 200 day, right? So I was looking for a bounce to at least up here. So I waited for the bounce, which happened here because I'm not a sicko. And then I was going to be using this little sideways range here as my leverage. But I sometimes mix my systems because this is going to be a long play. I probably want to start positioning. So I want to be scaling in with my two scales, one here and maybe one a little bit lower. Okay. With this being my support and having my stop underneath that level. Now, the other way to look at it is if I'm using this level here, I want to see an hourly reaction from the level here and then go long. So the issue with that is that at that point, then my stop needs to go below here with a little bit of wiggle room, not down here. So if you're waiting for the reaction, your stop goes here. If you're not waiting for the reaction, you just kind of scale in here. And also the other part is that if you're doing it on a morning setup, what AI actually suggested was to do like a 15-minute orb type play, which is you have your 15-minute candle, you get on the break, you put your stop either halfway through or at the bottom of the 15-minute candle. Or you could look for you use 15-minute candle, then you look for like a 2-minute high or low. 2, 3, 4. So you get your 15-minute candle, and I guess you go for your 2-minute high or low or something like that, or maybe a 5-minute high or low, and then you put your stop underneath the low of day. Because it's the most volatile aspect of the market, that first, if it wasn't happening through that, then you don't have to do it like that. You can just use the hourly. But you have to decide if you're using a sniper entry or not. And a lot of that depends on time of day, I guess. And I guess a lot of it also should depend on daily uptrend. So if you have a daily downtrend, you probably want to be a little more conservative with your stop loss. So you probably want to be putting your stop under here with wiggle room and not under here. So that's where. So I saw this. I didn't do the 15-minute thing because I didn't know about it. But after that, I had a conversation with AI or Gemini or whatever the hell, and so I saw this. I got in. I hopped in. And then I started doing the research of like other ways I could approach this trade, and because of that, I ended up just taking profit. I ended up just being like, you know what, I screwed up because I got in here and I was under the impression that I wanted my stop under here, but then I'm mixing my two strategies, which I'm still working out. So um, I should have gotten in on this wick. I had my stop underneath this 5-minute candle, and then taken profit, and then gotten stopped out. Instead, I took it, did some work, realized I wasn't in the right mindset, took the whole trade off, and it ended up working, but again, it was just a mistake more than anything else. I mean, Oracle's still on the table here. So again, this hourly level is being respected. It's at the lower range of it. And as much as I hate these, again, starting to see a little bit of like, starting to see a flat top here. So if you use a combination of this flat top and this hourly range, it sort of looks like a play. So Oracle is still on, I'll talk about Oracle. SoundCloud, I'm not interested in. I'm pretty sure the spread is horrible. Hmm. So let's go. PM, smush zone, SLB, back down below. Just a bearish market sucking that one down. Or sorry, the last few bear days have been sucking that one down. That one was positioned real well. QCOM, man, I was thinking about going bearish on QCOM there too. This stock at the bottom of its range now. Lame ass stock. OKLO getting crushed. So like let's look at this 110 level. So let's see what happened here and see how confusing it can get. So 110 level comes down, breaks bear. You can go short there potentially, right? Gap down. You probably want to sell in such a big gap down. Down to this little guy right here. Bounce. You close above that level. So then you ask yourself, okay, bulls, what are you going to do with that now? Because you close back above this very important level. You get the gap up, which is not ideal because you want it to you want this break to happen in regular trading hours. So gap up rules apply. It fades. You bounce off of that level here. You open the next day. You reject here. Then earnings comes out. Earnings fucks with you here, and then the movie. Yeah, it was at earnings that fucked everybody there because after this happens, this is a really good short because you reclaim that level again. You push up, you reject, get in, put your stop over this level here, and let it get down to the low just to move the move play. And if you leave a runner, you leave a runner. Ooh, the next one. The split has occurred. Netflix is interesting now. Netflix is interesting now. Spread's probably going to be better now, too. So, had this little guy here that was important because price rejected from it here 3 times. This was the low price pushed here. Saved it, saved it, saved it. Here's that same thing again. You get the the push rejection stop under here. Push down. Here's your stop all these people out. Push down. I mean, it's probably good for at least a higher low. Monthly consolidation. Did we get daily oversold? We did not. Yeah, it might have gotten it right there. No, no, it didn't. Probably worth keeping an eye on. I think Tesla's tough because it had that news that that guy was selling all that Tesla and Nvidia, and people are like, "Oh, if that guy is doing it, then maybe I should be." Z-scaler giving back. Again, hate these trend lines, and I sure draw them a lot, but there is something to this. Yeah, you get the rejection here, rejection here. This is right on the level here. You get the open underneath the level, the back test, and then the drawdown. I mean, those are pretty simplistic trades here. I tend to overthink these too much because I always feel like I have to get in like right here. These are hard trade to take. But if you see, hey, close under, here's your pop, and there's your drop. Like, it's just that's the early morning trade, and that's always the toughest trade. BBY going down. Rivian. Did Rivian have a big day yesterday with Tesla? No. I mean, the volume here on the way down here is not impressive. The volume up was way more impressive. You get this bull flag here. You don't hold this level of the bull flag. You actually see again, this was an important level here, right? You open right below it. So it seems like that seems like a spot where a lot of bulls like to take advantage of, or a lot of bears take advantage. Oh, QQQ trying to do a 5-minute inverse head and shoulders. Looking for some sort of hourly bounce off of the POC. Right at support. Rivian is just a stock that just kicks my ass, so I'm just not even gonna bother with it. This stock always gets me. And that's that. All right, well, shit, man. Oh, IVD down 14% after that big move. Come on. Damn it. Would it go up to $3? Yep. I knew that was gonna be selling at $3. But I don't want to sell it because then it turns into realized gains. All right. Well, very bearish. I don't really. It just doesn't feel like a good spot to continue to go bearish. I'm not sure. I'm not sure. Gonna give it some more thought. But that's gonna be it for me today. Enjoy the rest of your day. Good luck.